Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, November 3rd, 2022. So we are 5 days away from the elections. I do believe people are going to be a little cautious heading into it. The fractal pattern that I was showing you, that this is, what we are looking at and what we are following, pretty much went exactly as planned, where we came down, almost touched the 50-day moving average, made a new high, and then from there dropped. So this is what I was looking at, and I don't believe that we're going to be getting the same kind of reaction where we make new lows, even though something could happen that takes out the lows. But I think that what's going to happen is we're going to find some support at the 36.50, and then down, if it gets through here, then we'll be looking down at the 35.74. But I'm not against, see, that once as far as seasonality goes, after the midterms are over, typically it's a pretty bullish time of the year. We do get a lot of pretty good gains from it, so that's why I'm kind of more on the side of waiting for some kind of signal to start buying dips, and maybe we can go a little bit earlier. Like just if we get down to the 3,700, maybe take a third. If we get down to the 36.50, take a third, and then just wait and see if we come down and close this gap at 35.85. Now I'm gonna wait, and I'll let you guys know either via the video report or morning notes, as far as when I'm actually going to making that jump, because here you can see this was a really strong move down, and so we don't have any buy signals at all on this. So that's what's kind of having me believe that we're probably going to come down and test this trend line again, and just kind of use it until we get down to the 36.35, and then from there we start the rally back up after the elections, and then we get into the Santa rally. So there's a lot of reasons why I actually believe that these are the lows just for this year, and that using any kind of pullback is going to be probably a good buying opportunity. And obviously, if this gets taken out, all bets are off the table. But there's a lot of support zones under here, so that's really the way that I'm going to be trading it. And again, I just this is what my thinking is, based off of what I'm seeing in the seasonality. I mean, it is subject to change. There's if something happens that kind of derails everything, then obviously I'm not going to be looking to buy the dip. So um, if we take a look at the 15-minute chart here, here you can see that we don't have any bullish divergences. And right now, like I said, getting down to seeing a test of the 36.85 level down to the 36.50 makes most sense. Now, the one thing that you have to kind of just keep an eye on is this open gap right here, and that's at 3,600. So that's why I'm not just going right out and saying, okay, yeah, it's time to start buying this dip right here, because I want to get the best entry that we can. And as I mentioned in the morning notes, I don't think we're going to have to be perfect, but we don't want to be 200 points down on on the entries, and then fight our way up just to break even. So again, right now the bulls, I mean, if they get it above the 37.60 level, which is this is pretty much what I put in the report, where I was going to expect some kind of bounce up to the 37.60, and then from there we take out the lows. And if we take out the lows, then you start looking at these support levels, because most likely we're going to start getting some bullish divergences. But on the 60-minute chart, even if we make new lows right here, it's not going to be any bullish divergence. So if the 15-minute here, the way that I look at these is I kind of go between the 15 and the 60-minute charts, because the 15s will give you when we're going to get a nice bounce, but it's not going to mark the lows. And what I mean by that is, if we take out these lows right here and come down to, say, the 36.70 level, we're going to have some bullish divergences. Now that's going to probably cause a rally back up to the 37.50, And if that happens, then we're going to start seeing the our momentum indicator turning up, and then from there we make the bullish divergence, and then we just get long. And like I said, I wouldn't be surprised to see us trading up at the 4100 level. So that's really about it. I wouldn't overthink it. I wouldn't rush things. I think if we get down into the 3650 level and possibly down to the 3600, I think it's a great buying opportunity, and just put your stop below there and let it ride. And like I said, this may be one that we carry into the new year. We'll see. It's not going to be a whole lot of trade. Well, we will be trading in and out just like we did this one, but it's going to be that we're looking for to buying the dips as we head into the 2023 timeframe. So again, just to kind of sum things up here, we got long right in these areas here. We started scaling out at 3,800. We started scaling out at 3,900, where we should have been cash. Now we're waiting to rebuy this dip. And then from there, we'll turn around and place our stops under here and look for an upside target up to the 4,000 or possibly even the 4,100. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.